Well, gold prices have inched closer to the psychological mark of 1 lakh rupees per 10 grams as the bullion rate surged 1650 rupees in the national capital yesterday, Monday, on a weak dollar and uncertainties over US-China trade war driving demand. Well, the yellow metal of 99.9% purity reached as high as 99,800 rupees per 10 grams on Monday. Gold, meanwhile, of 99.5% purity bounced 1600 rupees to hit a fresh all-time peak of 99,300 per 10 grams in local markets. So far, this year alone, on yesterday's close, gold prices have risen 20,850 rupees, which is as much as 26.4% per 10 grams of gold. I'm talking about data from the 31st of December to yesterday, 21st of April. Just 4 months and a 26% return is what gold has given you. Now, globally too, gold futures breached the psychological $3,400 per ounce mark for the first time, rising over 80 per ounce or 2.4% or so over the year. Now, what exactly is going on here? Well, obviously, there is no doubt about the fact that this is some sort of a gold rush that we are seeing. Now, let's just recap some of the numbers that we told you and try and bring those for you on the screen as well. Gold has breached $3,400 per ounce in the US. Gold prices in India are now nearing the 1 lakh rupee per 10 grams mark. Now, what is all this telling us? It's telling us that in volatile times and when markets are volatile, investors switch to gold and use gold as a hedge. This is the first thing that it tells us. The next thing that we get to know is that this demand, this sudden demand that we are seeing in gold is emanating not from the jewelry that people like you and me are perhaps going and buying, but largely the big institutional investors as well as central banks, which are now building gold reserves instead of the US dollar. Why? Because the US dollar index has been falling, and this fall in the US dollar index is coming on account of the rising US bond yields, which is basically US tariffs, which are putting the US economy in a bit of a downturn, not investors not really being very bullish on the US dollar. Then in addition to that, it's important to remember that gold prices are calculated in USD terms. So $3,500 or $3,400 per ounce, that's the international rate of gold, which is paired with the US dollar. So when the US dollar becomes weak, gold becomes cheaper for the rest of the world. So some of the questions that we want to ask today and help you clear your mind is, what next for gold prices? Is this pretty much the ceiling which has been hit, or is there a new frontier that gold is going to breach? Or potentially, could there be a reversal in these gains and gold could dip? So you as an investor, should you buy, should you hold, or should you sell gold? And while you make up that decision, what is the best way to really be invested in gold? Should it be gold ETFs? Should it be physical gold or any other form of paper gold? And finally, is there any chance that sovereign gold sovereign gold bonds could make a comeback? Well, these are some of the questions that we will discuss and try and get answers from. Kunal Shah joins us. He's head commodities research at Nirmal Bang. Good morning, Kunal. Thank you so much for being here with us. Gold at 1 lakh rupee levels. Did you see this coming, let's say around this time last year?
Well, honestly, I had not anticipated it. I was expecting it to test around 1,000 kind of levels.
Yeah.
But it is soared quite a bit above my expectation. We have been a bull in gold from last many years, and uh, right now the parabolic surge in gold prices is a reflection of the trade war or the actual geopolitical tension built up between US and China in a form of trade war. Because if you see, uh, US is quite adamant right from the start. US has exempted all the countries till the month of July from the reciprocal tariff except China, and
Right.
China has retaliated very aggressively to the same. So
Right.
now we are talking about two economies which contributes 45% of the global GDP.
Right.
US and China accounts for the $50 trillion of GDP
Right.
together. And
Right.
global GDP is roughly at the start of 2025 was around $110 trillion.
Right.
So these two country, $50 trillion economies are fighting with each other. So can you imagine what kind of uncertainty that will stoke in the mind of investors, hedge
Right.
funds, money managers across the world, sovereign entities across the world.
Right.
What's going to happen? Nobody knows whether
Absolutely.
this is going to escalate further or whether there is going to be a de-escalation.
In fact, this
So,
is exactly what my next question to you was going to be, Kunal, that what happens from here, from this 1 lakh level or from the $3,400 per ounce level, which way is gold going to move? Is it going to move further up? Is there going to be some sort of a plateauing? Or conversely, could we see some sort of a decline in gold prices?
okay, first of all, nobody knows what's going to happen from here
Are
from the
tariffs and
geopolitical
tariff
point of view.
announcements going to be the singular deciding factor in assessing the direction of gold? Or it could be
See
any other
that.
commentary, like we've seen on US President Donald Trump threatening to sack Jerome Powell, and that is pushing markets down and helps the inverse
Yeah.
relationship and gold goes high.
Yeah. So first, till 3,200, it was a tariff thing.
Okay,
Now Trump is adamantly after Mr. Powell that he should resign, calling him loser on air, and indicating that they should do the rate cut immediately. So
right,
market is pricing in what if Federal Reserve cut the rate immediately. So gold has discounted the tariff war rate. Gold has discounted the interest rate cut also. In last
right,
2 days, gold has moved up by almost $200. So gold has almost discounted the rate cut. So now when the rate cut comes, what is going to happen? We are going to see some profit taking at that point of time.
okay,
But I am not recommending to buy gold at these levels. I
okay,
believe that these are the levels to book profit. I've been quite adamant on these statements from
all right,
last many weeks, and I
okay,
believe that sanity should prevail at some point. The way gold is moving, there is no asset class in the world. It is indicating that we are heading for a sharp slowdown or a recessionary scenario. So I think the sanity should prevail over coming months. You may see some positive announcement on in when it comes to deal on the trade deal front
sure,
also. So something of that will come off to
cool off the
lead to some
prices,
profit taking. But
all right,
whenever the profit taking comes, gold will continue to remain bullish in a bullish trajectory
right,
because of the uncharted territory where we are right now. Nobody knows which currency will take over from the dollar. If it does, if that kind of
and when it
scenario, what
does,
if the dollar crashes?
right.
What if there is a abrupt rise in the US 10-year bond yields? What if there is a recession? What if so? All these scenarios are not priced in. So that's why the moment you see a correction of 5 to 8%, you should again re-enter. But right now is this is not the time when you build fresh longs.
All right. So you're saying enter with a correction of 5 to 10%. Is that the potential downside that you're estimating for investors who don't take your advice right now and don't sell and continue to hold on to the gold that they have? I understand you should perhaps not invest afresh at these levels, but should the downside be limited to an understanding of just about 5 to 10%? Or do you think the downside can be even deeper than that?
I think downside maximum 5 to 8 to 10%, not more than that. The kind of run up you've seen more than 55, 60% rise in gold prices.
Yeah.
This is not good. So I think whenever the fall comes, at least 8 to 10% correction is something what we are envisaging. I'm not saying that it will come immediately.
Okay.
It may take some time. I don't know what's going to happen with the US trade front or the Jerome Powell front. What I don't know what is going to happen. But my advice to the investors or the traders, these wait for some time, wait for some correction rather than just chasing the mad bull run.
All right, and I think a fairly lame question, but just for the clarity of all those who are watching us right now, for those who do enter the market now, later, 5%, 8%, 10% correction at whatever point, is there any merit in holding on to physical gold, or should it just be paper gold or gold ETFs?
I think gold ETFs are a good instrument to invest in. Either you should go for gold ETF or gold fund. Those are good instruments to invest in gold.
All right, and finally, can we very safely conclude that sovereign gold bonds have lived their life, and there is no way in hell that we will see SGBs coming back?
The way gold prices have rallied, it looks quite difficult. I mean, uh, government will think many times before coming up with another gold bond tranche. It's not going to happen.
All right, Kunal Shah there joining us this morning. Kunal Shah, thank you so much for taking time out being here with us on News 9.